Hello, Hamel here with the daily market updates. So today was a really ugly day in the market, and it was equally ugly for me since I'm 100% in the market for a while. So everything was down about 3% or more. So looking at SPY here, so as I was saying, this was the line in the sand. So it undercut that line, higher volume. So there is nothing good about this. So think about what I just did. So I entered here, which was a really good entry. So I was up almost, approximately. On an average, I was up 7% on entire 401k, right? So now I went up, I totally let the profit slide into negative. So right now I am probably negative 1%. So the account went up 7 or 8% and I give it all back. So that is kind of a sin. You never want to do that. This is not the first time I've done it, and this would not be the last time I'll do it. Again, it's a learning lesson, so I need to learn and do things better next time. So before I move any further, I want to make sure that I speak about this first, so I don't forget to say it. If you are in cash or whatever allocation of cash you have, If I had cash, I will not put any money to work right now in pretty much anything until market gives me some clarity. Clarity meaning it has to give us a better setup where it gave us here. It has to consolidate sideways. There has to be some uncertainty removed, whether we're going to get a stimulus or not. If yes, when? Do we have a precedent on November 4th? Or is there going to be disputes which will take weeks and months and days to resolve? So right now cash is king. So if I have any cash, I will not put that to work. Fortunately or unfortunately, I don't have any cash. As I've been stating every day, I am 100% exposed, which is fine. This was one of the scenario. I knew this may happen based on how it was working. Again, thinking something and putting it into action is different thing. So knowing or feeling doesn't really mean anything. So I am, and I stay in market for now. I am not going to liquidate at this point. It's a little too late. This can still continue to go down. We probably have another 4% downside if it continues to go down. It can undercut this low first, and then it can continue to go down. So anything can happen, which is fine. I'm going to learn a lesson. So next time, if I'm going to make this move, especially in index, and I knew this was a lower low, lower high compared to this. So, but again, I was looking for this area right here to provide support and then bounce from here and continue up, which did not happen. So next time, in the hindsight, what I would like to do is, since I lived through this, I am going to make sure that if this is a lower high, then I'm going to make sure that this trend line it breaks through this trend line after breaking 8-day or before breaking 8-day. If it does not break through this trend line, so right here is where I should have booked profits and I should have liquidated some of the stocks to be on a cautious side. Well, I did not do that. So now what is the plan? So the plan is I'm going to stick around in most of the stocks for another quarter. Again, it depends on the price action, but for now 401k stays in. I still think there would not be a dump. Fed is on our side. There is money printing going on. There is nowhere else to go. There are some catalysts around the corner. Election results. Somebody's going to get elected, hopefully, on November 4th. Hopefully it's a landslide. That just removes a huge uncertainty. I'd rather it be a landslide than continue to drag. Number 2, stimulus is coming. Once they know the results, politicians are going to get together and they're going to look for their own election, which is down the road. So they will get together and get it done. And then vaccine should be around the corner as well. At least if not in November, as we approach 2021, I'm hopeful that some of the greatest companies in the world will come up with an answer to this pandemic. And then things from there should hopefully get better. So those are my thoughts. So again, I just basically say what I do. Now again, you may have heard me say that I will liquidate if this drops underneath this line. It's one thing about saying, but your emotions always come into play. So as you can see, the lessons learned by me are that I need to do things differently. Now, I also made mistakes when I prevented all this entire drawdown, as I recorded in my video, from here to here. However, I made a mistake in another account. So I'm going to continue to make mistakes. I'm never going to be perfect, but I need to learn and make less mistakes going forward. So that's about SPY. So we'll see what happens, but I'm going to continue to hold. If it undercuts this low, then a 200-day moving action is in play, and then we'll go from there. Qs, same thing, down even more, 3.42. Again, high, this line is in play, 200-day moving average. IWM was also weak today. So again, now one thing I forgot to mention before I forget again. So these gaps, right? I don't like gaps up or gaps down. Frankly, they're going to get filled in most likelihood. So most likely than not, over the course of, well, again, election is too close. So I don't really know what's going to happen. We'll see, but this volatility will continue. However, this gap is almost certainly going to get filled at some point. So that will give me an opportunity to see what I do at that point. Do I get out of this account and go back to cash or bonds and then wait out for a better setup? So I will obviously cover that ahead of my plans. So those are the three indexes I covered. So again, if you have cash, if I had cash, I would stick in cash. I will stay in cash for now. Let me cover a couple other indicators here. So this is a Mclellan Summation Index. So as we can see, so this basically is the trend directional and then breadth. So as you can see, when there was a bottom, this continued to rise up along with S&P. At this point, so, and then from here, S&P continued to move. Well, it was sideways here, as you can see, sideways chop here. And then S&P continued on its merry way to make a higher high, while whereas this made a lower high. Okay, and then now S&P is making a lower high, and this one is making a lower high yet. So this is continuing to show weakness. Let's see at one more indicator here. So stocks above their 200-day moving average. So again, a significant drop here in percentage of stocks as well. We are at 43.31% above their 200-day moving average. So this is the prior low. So we have a few further downside to go, about 8% more of stocks, or it can make a higher low at some point, and then we can see some upside there. So we'll see how that transpires. Now this is stocks percentage of stocks about their 40-day moving average. So this one is pretty close to the prior low. So again, whenever this low hits, you can see this is the S&P line. It bounces to certain it bounces for sure. The bounce may not be that strong or weak bounce. We don't know until that happens. But every time this hits a bottom here, you can see SPY go up. So index and market goes up. Right here you can see as well a low, a bounce, a low, a bounce. So we will see what kind of low this is. Now sometimes it will make a low and then it will go up a little bit and make another lower low before it proceeds to go up. Same thing here, low, another lower low. Now here it was a crescendo bottom, so it was pretty much a low and then it went up. So that's all I have. Again, if you have cash, please stay on the sidelines. In my opinion, that's what I would do. I'll continue to cover this and we'll see what happens. So again, I'm still, right or wrong, I'm still 100% in the market. We'll see what future brings. Have a good one. Take care.